Hello, listeners. Welcome to the Pre-Market Update. The podcast is powered by AI. I'm Joe.
And I'm Sarah. Today is February 5th, 2026. Let's dive in.
Market overview. Thanks, Sarah. We're looking at a somewhat cautious, if not flat, start for the Indian indices today. The GIFT Nifty is currently trading around the 25,858 level, which represents a very slim premium of about 10 to 12 points over the Nifty Futures' previous close. This tells us that the Nifty 50 and the Sensex are likely to open with a wait-and-see approach. Yesterday, we saw some consolidation after the recent rally, and that trend seems set to continue. In the F&O space, the big news that everyone is talking about in the trading pits is the unexpected government move to raise taxes on equity derivatives. This is a massive development for India's $36 billion arbitrage trade. Fund managers are already bracing for lower returns, and we might see some shifts in institutional volume today as a result. On the flip side, the India VIX, our local fear gauge, has actually fallen recently. This suggests that while there is some tax-related anxiety, the broader market fear isn't spiking just yet. Investors are largely holding their breath for more clarity on the India-US trade deal and, of course, the upcoming RBI interest rate decision. If you're looking at top movers, keep an eye on the heavyweight financials and the tech sector, which might face some spillover pressure from the US.
International markets, that's a great point, Joe. Looking at the global landscape, it's a bit of a bumpy ride, especially in the US. The Nasdaq and S&P 500 have been sliding as a tech sell-off persists. Investors are getting a bit nervous about the massive scale of AI spending, and Alphabet's latest CapEx plans, projected to hit up to $185 billion by next year, have spooked the market rather than excited it. Across the Atlantic, European markets like the FTSE, DAX, and CAC 40 are keeping a close watch on trade developments. Australia's trade minister is heading to Brussels to try and secure a free trade agreement with the EU, which is a significant move to stave off pressure from the Trump administration's trade policies. In Asia, the picture is quite mixed. The Nikkei in Japan is actually a bright spot, as investors bet on a decisive election victory for Prime Minister Sanai Takaichi this weekend, hoping for expansive fiscal policies. However, it's a different story in Indonesia, where the market is facing a once-in-a-generation rout due to a looming MSCI downgrade. In the commodities space, we are seeing some wild moves. Gold has been incredibly volatile, actually breaking past the $5,000 mark recently before whipsawing as traders seek clarity on the new Federal Reserve Chair's policy direction. Meanwhile, oil prices have slid toward the $70 range as upcoming U.S.-Iran talks in Oman revive hopes for de-escalation in the Middle East.
Business Story 1 and 2. Focusing back on India, we have some major corporate stories brewing. First, let's talk about the heavyweights. Bharti Airtel and Tata Motors passenger vehicle division are the ones to watch today. Bharti is navigating a shifting telecom landscape, while Tata Motors continues to be a bellwether for domestic consumption and the EV transition. The second major story is the fallout from the tax hike on equity derivatives I mentioned earlier. This isn't just a policy tweak. It's a direct hit to the $36 billion arbitrage fund sector. These funds, which many retail investors use as a low-risk alternative to fixed deposits, are going to see their returns compressed. We could see some churn in the Nifty 50 banking and financial stocks as these funds rebalance their portfolios. Additionally, we're in the thick of the Q3 earnings season. Results so far have been a mixed bag, and any deviation from guidance today could lead to sharp individual stock movements in the Nifty 50. Watch out for the energy sector as well, given the recent volatility in global crude prices.
Business Story 3 and 4. On the international front, tech is dominating the headlines. Alphabet is under the microscope after its massive CapEx announcement. Investors are essentially asking, when does all this AI spending turn into profit? At the same time, Qualcomm shares have taken a hit. CEO Cristiano Amon noted that a memory shortage is starting to define the size of the mobile market, which dragged down their latest forecast. In a more positive turn, Panasonic in Japan saw its biggest gain since 2014, soaring 15%, on hopes that their long-term restructuring is finally paying off. And for those following the green energy space, Chinese solar stocks like Jinko Solar and LONGi have rallied. Why? Because reports surfaced that a team from Elon Musk's SpaceX and Tesla visited several suppliers in China. That has sparked a wave of speculation about future collaborations. Lastly, Yum China reported a profit beat despite a massive price war in the food delivery market, showing that even in a tough Chinese economy, some major players are finding ways to maintain margins.
Economics and geopolitics. To tie it all together, let's look at the policy environment. In India, all eyes are on the RBI. There's a fine balance to strike between maintaining growth and keeping inflation within that 4% target. With the U.S. Fed also transitioning under a new chair nominee, the RBI's decision will be crucial for the rupee stability. Geopolitically, the Trump-Xi talks and the potential India-U.S. trade deal are the two biggest pieces on the board. Any progress, there could be a massive catalyst for Indian exports. Also, don't ignore those U.S.-Iran talks in Oman. If we see a genuine de-escalation, the reduction in the geopolitical risk premium for oil could provide much-needed relief to India's trade deficit and help the government meet its fiscal deficit targets more comfortably.
Key takeaways. So, what should you keep in your notes for the trading day? First, expect a flat to tepid start for the Nifty and Sensex. The gift Nifty isn't giving us a clear direction, which usually means the first hour of trade will be about finding a floor. Second, the tech sector is under pressure globally. Be careful with Indian IT stocks as they might mirror the Nasdaq's anxiety over AI valuations. Third, watch the arbitrage fund reaction. The tax hike on derivatives is a structural change that might dampen volumes in the FNO segment today. And finally, keep an eye on gold and oil. The volatility there is a signal that the global macro environment is still very much in flux.
That wraps up today's update. I hope you gained useful insights to navigate the markets today.
Add your thoughts in the comments and follow for more such updates. This is Sarah.
And Joe, signing off. Stay informed and happy trading.